How's it going, everyone? It's Sam. I want to play a video that just was recorded with Natalie Burnell and Tom Lee. Tom Lee is head of Fundstrat. He was someone that was at JP Morgan for years, heard about Bitcoin over 10 years ago. They didn't really research it. They thought that there would be too much negative publicity on that. So as soon as he did his own thing, he invested into Bitcoin. He talked about Bitcoin. He's very bullish on Bitcoin. So I want to play what he says. A lot of people like to hear what he says because he's also gone against the grain all of 2024, actually being bullish. And the markets have done extremely well. He gives his price predictions and they are quite high. If you do want to trade cryptocurrency, by the way, there is a link down there to Margex. It's going to be the first link. You can trade cryptocurrencies using leverage over there. Of course, always do your own research. Make sure you understand what leverage trading is. There's also a link down there to CoinW as well in case you want to trade there. But let's get into this video clip from Natalie Burnell.
Well, with your experience with emerging technologies, what you said earlier made me think about the power of the network effect that Bitcoin is benefiting from. How did you hear about Bitcoin and why did you develop such a strong conviction for it?
Bitcoin. Now, I first heard about Bitcoin around 2016, and that was before 2014. And that's because at JP Morgan, there was talk at the time that our FX team at JP Morgan, so this is probably 2012, 2013, thought that Bitcoin could potentially be viewed at some point as a currency. But it was a very controversial view because at the time, it was very hard to get pricing information for Bitcoin through traditional pricing feeds. And maybe equally important, the reputation wasn't great. So I think the firm felt there was some reputation risk for doing a more involved analysis of Bitcoin. But when we started Fundstrat, we were less constrained by these sort of reputational risk issues. So it was a chance for our firm and our research team to really do a deep dive. And that's, I think you kind of hit it on the head that one of the things that really persuaded us about Bitcoin is one, blockchain actually was a pretty unique technology because it was really so censorship resistant and it actually worked really well. I mean, there hadn't been any false entries on the Bitcoin blockchain, but maybe the more important fact was, even if there's something we don't completely understand, the fact that Bitcoin's price was pretty easily explained by the number of active wallets and the activity per wallet, which essentially is network effects, shows that there was a price dynamic that even if we didn't fully understand it, could actually explain why the stock, why the stock value or the aggregate network value could go up quite a lot over time.
Well, I know that your short-term outlook is $150,000 when it comes to the price. So I do want to talk to you about price, but so many people who watch this, who love Bitcoin, they do see this as more of a movement, a mission, a transformation of our financial system. They see a future where nations really adopt it as a reserve asset. So I'd love to hear your take, both short and long term when it comes to the price, but also just this asset and how it could transform the way that we interact with value.
One, I would just point out, I think it's easier to have conviction on the longer term price than a shorter term. Because in the short term, there's a lot more factors beyond fundamentals that affect, a price of anything that trades on a market. And for instance, just recently, everything happening out of Germany and Mt. Gox is creating short-term headwinds and, potentially even breaking technical patterns, but it doesn't change where Bitcoin should be 5 years from now. But the price target of 150,000 is actually based on work from our head of digital strategy, Sean Farrell. And he's looking at a combination of his essentially what looks like a stock to flow model and a essential, like basically a price to book model. What is Bitcoin cost to produce and what is that break even and what multiple should you assign to that? And he triangulates to 150,000 roughly by the end of the year. And I think that's pretty achievable. I mean, it really principally only happens if the S&P actually can rally into the end of the year, and that's our base case. And, if someone's asking, why should they be interested in Bitcoin? So let's say you have some folks listening to this and are maybe curious but they're not convinced they should own any. I think that question has already long been settled because, Bitcoin is now essentially a bona fide asset class. It has the backing of BlackRock, which is the largest asset manager in the world. Larry Fink even today was speaking post earnings about how important Bitcoin is to the future of BlackRock. And it's something that they're encouraging clients to adopt. I think that the mistake someone might make if they're interested in Bitcoin is thinking they have to go 100% of their portfolio into it. They only need to put 2% or 5%. And, if you think about someone sitting on cash, that's like 1 year's worth of interest on their portfolio. They just have to dedicate to crypto. We made that recommendation when we first wrote about Bitcoin, that they should put 1% to 2%. Today, if they didn't rebalance that recommendation, it's 80% of their total portfolio. So it's been a huge winner for our clients, and many have told us it's really changed their lives by making what they saw as a kind of a low risk bet, 2% allocation into crypto. And I think that's how people should look at it today, because Bitcoin isn't peaking. It's not that widely adopted yet. There's still so many skeptics, and there's many financial firms that are restricting their clients from having access to exchange versions of Bitcoin. So the ETF today is not even approved for many firms. And it tells me that there's still a lot of future holders of crypto. And I think that mistake someone could make today thinking Bitcoin's not relevant is the financial system does work really well in the US for wealthy Americans. But even in America, I think that only 45% of Americans actually have a bank account, and another 25% consider prepaid credit cards and debit cards as their primary form of banking. Banking is very expensive in America, and that's for one of the wealthiest nations in the world. Outside the US, crypto is really going to prove to be a much more low-cost banking system for folks, especially if they want to do remittances and move money around the world.
Big shout out to Natalie for this video here. It is interesting to hear what Tom Lee has to say. I always like it. He outperforms the market regularly, and has outperformed, especially in a year where a lot of people were fearful. Now, a couple things that he said there that are really important. One, it's more important to think about the long term for Bitcoin, right? Otherwise, you get stuck up with the overhang. We had Germany selling, and the price fell down to 53,500. Mt. Gox on Tuesday, it came out that they apparently distributed some tokens to clients. So Bitcoin's price fell down. Now, it's important to look at the long term, because otherwise you get stuck with some of those short-term headwinds. But as he said, the ETFs are being pushed by some of the biggest players in this space now, Bitcoin and Ethereum ETFs. And the fact is, a lot of people still don't have access to them. So once they gain access, they might start buying. Of course, always do your own research. If you are bullish on Bitcoin or crypto in general, if you want to trade, there are those links underneath the video. Thank you so much. I appreciate it. I'll see you all in the next video. Bye.